Well, the market is a lot of things, but boring is not one of them. We'll talk about what we saw with GDP today between the actual report for the advanced estimate, what the Atlanta Fed GDP now said, what that means for the economy, for the markets, and how we continue forward from here, what we saw from corporate earnings, personal income, and outlays. There's a lot to unpack, a lot to digest, and a lot to look at. Going forward, I'm going to share it with you in this video. And just so you know, when I talk to bald guys, I usually raise my voice a little bit because they can never hear me. All right, that's enough of that. Chewing the fat. Here's the skinny. Let's pop up the numbers here for you. So for GDP, we saw a negative 0.3%, which is economic contraction. The market did not like that at all. Now, mind you, I said over in the Discord, which mind you, the link's in the description. You guys can come over and join us. You can see me and the other expert panelists. We put out our analyses, our trades. You can go, you can talk to us over there. You got tons of things to see as well. You got tons of products and services. I'll talk about that later. But I did say over there that I'd be careful to be overly bearish right now while we wait for some other numbers to come out, including Atlanta Fed's GDP now that followed personal income and outlays. It was a few hours behind, but we still got it. And like I said, I would talk about that. So for the advanced estimate, negative 0.3%, that's down about 0.6% from what we were expecting. Trading Economics forecast had it at 0.5%. So while that's not great to see, if we look at Atlanta Fed GDP now, take a look at this chart, because over here, this dot that you see, the Atlanta Fed GDP now estimate is between 2 and 3%. As a matter of fact, it says up here when you scroll up that it's saying 2.4%. Now, mind you, that's a very early number, but what's the market doing right now? The market's actually calling that, maybe that negative percent is actually a one-off for us. And, we'll just go with the news that we have right now as the direction that we're heading. And hey, maybe the recession's not yet. Maybe it's not coming at all. And maybe we'll just recover a little bit. And that's what we saw with the market recovering throughout the day today, having a relatively high close. And I'll talk about that for the Qs, for the NASDAQ 100's ETF, SPY, and then also IWM, plus a few others that I'll handpick out of there as well. So let's go with some of the other numbers that we have over here real quick with the calendar as we look at it. So zoom out. There we go. Personal income and outlays. Check this out. Core PCE, flat month over month. Personal income, 0.5%, not so bad. 0.3 or higher, it's good to see that personal income. Personal spending still coming in relatively high. These are really good things. This is what I'm talking about when I said not to be overly bearish from the negative 0.3%. If the Atlanta Fed GDP nowcast came out negative, that would be signs of 2 consecutive quarters of negative GDP. That would be technical recession indication. The market probably would have sold off more on that. But instead it was like, oh, we had a fluke and now maybe that's a one-off for us. But like I said, that's the initial number that we get for Q2 for GDP. We still got 3 months of data to go on that one. So that's probably going to change a lot over time, maybe to the upside, maybe to the downside, but it will change over time as things continue to play out for the Atlanta Fed GDP. Now, by the way, if you scroll down below that, they actually show you the release dates. Just click on that tab and you can see we're all the way down here now for the 30th, but then May 1st coming up next. And you can see all the dates month of May, June, July. I think they post all the way through the end of the year. They do 12/24, so up to Christmas Eve if you want to see that. So what else do we see on here? Year over year change, 2.3%. Not bad. So when I talked before about the 4 pillars that prop up markets, one of those pillars is high GDP. 2.4% isn't bad. Definitely a whole lot better than contraction. Subdued inflation. We have numbers for subdued inflation. Easy monetary policy. We don't quite have that yet. We want to see the Fed find reason for further quantitative easing, and we don't have that yet, but we do want that easier monetary policy. We want the rates to come down more from what they're at right now. So that thing is being very stubborn for us. It's keeping the markets from going into a full-on rally from where they're at right now. And then also, the last thing is labor market, which that takes us to Friday's catalyst, which is non-farm payrolls and the unemployment rate. And then I should also mention we got ADP numbers today at 8:15. So talking about the labor market, that 4th pillar that I talked about, ADP employment change kind of soft at 62,000, but that still is job growth that we're looking at. It is versus the 115,000. That was at 8:15, came out before the GDP numbers that we did. Both those got priced in the market already. Eyes on Friday now. Eyes are on the prize for that. So with that said, let's go over to the charts. Let me kick this up here for you, pop that over, and now we're going to go over to the Qs. There we are. Where did we close today? Importantly, everyone, I want to stress that again. Importantly, we closed up above this red 50-day EMA. That's a very good thing to see. If I put up the simple moving averages for just a moment, we got a small rejection there. In the post-market, though, the Qs, the NASDAQ 100 ETF that we're looking at here, moving up above the 50 EMA and SMA, we could potentially get that moment where we start to trade above those moving averages. That 200-day is in line for that next point of contention, if you will, for where we could go from here. So the direction could be northward with those corporate earnings panning out the way they have. So if you look at Meta, just from the numbers released, trading up in the post-market by 3 to 4%. If we look at Microsoft, that's another one that also reported today in the pre-market hours. Where do they find themselves? Let me bring that down because that price is way up here at 419 is what we're looking at. So high trading volume going into Microsoft today and excitement up above the 200-day as a matter of fact for Microsoft. And now let's go back to the Qs because that brings me full circle once again to that 200-day that we're looking at, bringing down the EMAs. That 200-day, watch for it because if we are up above, we put a full candle up above the 50 tomorrow, if we sit on it, we rest on it, that next hurdle to climb, that next mountain for us to get over and on top of is the 200-day. Moving over to the SPY, this is once again the 50 EMA. We got rejected off it, just a little bit below it, but it's been lagging behind the Qs just a little bit. In the post-market, up above once again. If we put up the SMAs up there, not quite up to the 50 SMA, but just like I said with the Qs, we want to get a candle on top of that. We want to keep this bullishness going for the markets. And now, mind you, there still is a lot of pressure on that labor market because those numbers that we got from the Atlanta Fed GDP, those are early numbers for us. If we see signs of further weakness coming in here, those are things that can sell back down. So we'll see when the earnings calls actually happen for Meta, for Microsoft. Just two companies, for example, that would have QCOM. I think Qualcomm sold down in the pre-market, at least last I looked. There we go. The post-market, they're actually down a little bit in price. I didn't look at the numbers yet for those companies, but that would be one that is dragging a little bit on the numbers that we see in the post-market here. IWM, I said it'd be lagging behind because it tracks the Russell 2000 stocks. It does not have the same pop that we have for NASDAQ 100, for S&P 500. It's just kind of floundering at the moment, and I said it would lag behind. It really relies on those four pillars. When those four pillars are polished and shiny, the high GDP, subdued inflation, easy monetary policy, strong labor market, that's when those surges and outperformance are going to come in for the Russell 2000 stocks, especially the easy monetary policy and subdued inflation. Those two things are what this thing's absolutely waiting on to make that perfect recipe for outperformance for the Russell 2000 stocks. Again, that's IWM as the ETF. Bitcoin. I know that there's a cryptocurrency out there called Buttcoin or something like that, but man, if this thing makes me wait much longer for that pop, for that breakout above 95,118, I think I might start referring to it as Buttcoin. So, Bitcoin, just make that jump already. Make that leap, push up over this. We do have this gray little ray coming across here that sitting on top of that ray is also going to be very important for us for further bullishness. And that happens to be around the mid 96,000 range, so about 96,005, we'll call it, at least in the near term on this. And those rays, maybe you didn't see the video from a while ago. Let me actually go out, we'll reset that, and here you can see that fan type structure for these rays in the background, or maybe you can see them. Let me try and take down some of these other markings that I have here for you, and that's really going to help us see in the background of this. There we go. One more. Perfect. So these rays that you see going across your screen, Bitcoin tends to follow them pretty religiously. And well, we're getting really darn close to that next ray that's up there and getting back up above it, breaking that as resistance. That's what opens up the gateway up to that six-figure number again for Bitcoin, up to about $102,000. So that's what I'm looking for Bitcoin. XRP had a little bit of weakness today, really threatening to go bearish on us. And XRP, don't you dare, or I will call you Buttcoin number 2, or maybe, I don't know, ex-wife coin or something like that. I don't know, you name it. I'm really watching XRP to see if it can really break that momentum to the upside. Failed off of the $2.36.5 or so. Got rejected off of that. Still up above the 50, the 13, the 5, the RSI. Still climbing for right now. Hopefully, we're getting to that point where it starts to turn around for us. So I did talk about Tesla. In my morning video, I'm going to bring that back around again because for Tesla, what exactly do we see? I want to put up the SMA for this one and bring down the EMAs. There we go. Because Well, we saw quite a sell-off for Tesla. This thing bottomed out, going all the way down to $270 per share before closing at $282. And it's still a drop for us for Tesla, about 3.4% or so for Tesla to see that close. Need to get back up on top of that 200. We haven't done it for a long time. The last time that we had that close up above was March 25th. And we're still up above the 50 SMA. That's a good thing. The momentum's still bullish. That's a good thing. But labor market, I think, is really going to be an important part of this recipe. Watching for Tesla to have that bit of recovery. The thing that I really haven't mentioned throughout a lot of this video, by the way, and is, well, mentioned a little bit of it, the Discord, guys. The Discord is the place. It's got the bread bot that can tell you when the big moves are coming for your favorite stocks, for your favorite cryptos, you name it. It's there in the Discord waiting for you. AI tools, advanced charting tools, the expert panels over there as well that I'm a part of. And that, like I said, in the Discord, the earner tier, sign up for that. That's going to get you unrestricted access to everything that it has to offer. And you can click on it. You can read for yourself. And you just keep scrolling and scrolling through all the products and services that are there for you. And if it sounds like your kind of time, you can join a community of thousands of members who are all there striving for financial freedom and adding alpha to their portfolios. And also, while you're looking in the description, if you want to learn about technical analysis, if you want to learn about trading, using the bread recipe, which the bread bot follows, and also trading options, there's coursework for that through Stockmo Academy. Sign up using the code word doctor. It's going to save you a ton of cash. And I have 17 years as an educational professional with my earned doctorate in education. Then making official that doctor part of Dr. Stock in the channel title. I can tell you the courses are really super solid and well put together. It's the best, most easiest to digest coursework that I've ever found, and they can really up your trading game. Make sure you use code word doctor. Also, if you bundle the courses, you're going to save a ton more. With that said, let me wrap things up for you. One thing that I haven't really talked about through all these charts, through all these numbers, is just the tariff thing. The more that tariffs go away, the more that they can subside, the more that things are going to ease in a dramatic sort of sense with tariffs, the better for the markets. The market's going to absolutely take that deep breath and get that nice big green old candle moving. That'll help us get up above the 200. The more that we worry about recession, the more that we have that uncertainty, more like, yeah, it's good, but, and then whenever we list off a whole bunch of reasons, like things are kind of okay, but, and then we have a whole list of other reasons like, yeah, but GDP was negative, and yeah, but employment wasn't all that strong, and inflation, yeah, it's low, but it's not negative right now. And negative would be deflationary. Right now, that was actually a decent, really good inflation report that we got through PCE. Well, then that puts pressure on CPI and PPI to tell that same story when they come out in the middle of May here for April's numbers, which once again are going to further impact what we see from the Atlanta Fed GDP now numbers. So tariffs are a big one. Inflation's a big one. We still have that labor market to look at, guys. If you want to see more of my commentary, hear more of what I have to say, see more of my analyses, especially faster than what I can get them to YouTube, the Discord is the place to find that. You want to educate yourself some more, that coursework is down there waiting for you. Use code word doctor. If you like what my channel, you want to see more of my videos, make sure you hit the subscribe button. Otherwise, guys, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.